Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon live webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonic to the stage, who's going to be talking about market-wide option volume insights. How are you doing today, D?
Good morning. How are you?
Good. Let me, why don't you share your screen? All right, there we go. There's the Market Chameleon landing page. We're ready to roll, my friend.
Good morning, everyone. So let's navigate to the options volume report, and we'll find that under options. We'll go to the options volume report. And what we'll do today is take a look at what the volume looked like in aggregate market wide. So up top here in this report, we see stock symbols, and next to these stock symbols, these are stocks that have trading volume on a day, and next to each symbol we have a breakdown of the volume for that particular underlying. But if we scroll down further, we could gain more insights on what's going on a market-wide basis. How are people in general using options contracts? And this will break down that volume into those components. So over here we have a chart of where most of that option volume is flown to based on sector. So we could see over here that and it breaks it down by individual stocks and ETFs. So ETFs represented 32% of all the option volume, which is, you could see, the greatest portion of that pie. If we hover over other parts, we could see that the technology sector had 19.7% of all the option volume, and that is followed by let me see over here, consumer cyclicals. So the technology sector by far made up the biggest portion of the traded option volume. We could also slide down here. Well, over here we do have some more stats just on a high level. We could see the total volume versus the average daily volume in aggregate in these same stocks. So yesterday it was 48 million versus an average daily volume of 60 million. On a day that's less than average. Breakdown between the calls and puts, 43% puts, 57% calls. So people prefer to trade calls over puts on a day. We could see that a lot of stocks in here had option volume greater than their 30-day average, over 1,100. And the top 100 stocks had 79% of all volume. So out of the thousands of different securities that have options available for trading, if we looked at just the 100 top busiest by option volume securities, well, 79% of the order flow went into those securities. So if we slide up, you could see here, Tesla, SPY, Coin, QQQ. If we just did the top, 100 out of the 5,857, well, the 79% of the volume flowed there. The bottom 4,300 was 21% of the volume. If we take the top 10 stocks, what if we just did just these top 10? Tesla, SPY, Coin. If we just took the top 10 stocks, Well, what percent of the total trading volume that they represent? Is there, in other words, how are people trading options? Is it like distributed equally around many stocks, or is the volume concentrated? And this tells us here that the top 10 stocks made up 46% of the total option volume traded. So there's a big concentration of volume in the top 10. And if we go to the top 100, it goes from 46% top 10 to 79% in top 100. Here we see ETFs made up 53% of the stocks. A lot of stocks had no trading volume. So these are just quick stats for us to understand how people are using options, where volume is flowing, how's the order flow distributed amongst different available securities. We also could come down here and get a breakdown of the volume further by putting it into components. So when we look at option volume or option trades, they could be executed as single leg trades, buying a call or put, or it could be entered in as a multi-leg trade with a call spread, put spread, butterfly, and so forth. And we see that 56% of all the traded volume were single leg orders, call or put. 40% of the volume were multi-leg. So these would be like strategies involving more than one leg to a spread. 4% were contingent that had a stock component tied to it, like a buy rate or options trade that was done to neutral, but it had a stock component tied to the trade. Further, so here we see that traders prefer the single leg, trading just the single leg options, but a significant amount did flow to multi-leg trades. So a huge or decent amount of the volume involves multi-leg trades and strategies. Here, this lets us know where are traders sending more orders in regards to expirations, because options have short dated options, longer dated options, intermediate dated options. So where is that volume flowing to? And here it says that 51% of all the traded volume had expirations of 5 days or less. So you could see that over half of the volume is concentrated on those short dated options or ones that are expiring within the next 5 days, which are options that have larger gamma and theta, lower vega. If we then broke it up to different components, we could see that 17% of the volume was 6 to 10 days to expiration, and then 16% were 11 to 30. If we go out further out, you could see that it gets less and less. So a lot of the traded volume are on the shorter dated options. This then looks at the order size. It takes the order size, looks at surrounding data, and then buckets them into order size that corresponds to small trader, retail trader, professional, institutional, right? So one contract for $1 with no other trading around it would be a small trader. If you were looking at it, a trade that was 1,000 contracts at $5, that would be an institutional size trader, more consistent with a much larger trader. So the breakdown here is kind of distributed almost equally, where 21% were small, 30% were not we're still retail size, but not very small retail. Then we got professional and institutional. So all trader size types have been participating in the market, and it looks like it's kind of, fairly distributed amongst all of them. So then single leg calls, single leg puts. What if we just divided up the single leg options and looked at the calls versus puts? So out of those single legs, 60% of the volume were in the calls, 40% were in the puts. The calls, 55% were in the options with 5 days or less, while in the puts, 66% of the volume were in options that expired 5 days or less. And this is the breakdown by calls and puts for each expiration. We also see, if we go down here, what did traders prefer to trade as far as strikes relative to where the stock is? So if there are strikes, if the trading is in strikes that are close to where the stock price is, that's the at the money options. If people are trading options that are further out, if the stock's 100 and the strikes are 120, those would be out of the money. So how are people using, the options relative to where the stock price is? And 53% in the calls were at the money, 49% of the puts were at the money. And if we go, not as many in the money options, 36% of the calls were out of the money, while 46% of the puts were out of the money in single puts. So this kind of shows us how traders prefer, or what strikes they tend to target relative to where the stock price is on that day. So you can see majority, half of all the options are around at the money. But still a decent amount are out of the money, especially in the puts. You got 46% of the puts that trade are out of the money puts. The calls, not as much, but still 36% of the trading volume were in out of the money calls. And this is a quick way to get summary stats of the trading volume in aggregate that's market wide. All right, Will, I'm going to throw it back to you at this point.
All right, great job as always, D. Thanks for bringing these webinars to the Chameleon community, my friend, and we will see you tomorrow.
Thanks everyone for joining. Stay safe. Have a great trading day.
Have a great day, D. Thanks. Hey everyone, thanks for joining another Market Chameleon webinar. Remember to like and follow us on all the social platforms. I see Swami showed up. Morning, Chuck. I didn't see that until now. Everyone have a great, safe trading day. If you didn't catch Ryan yesterday, he did a great webinar. Jim asked a bunch of questions, so worth a rewatch. And he has some interesting things he's doing. I will talk about him at another time, or maybe next week's show, next Monday, he can show. That will allow you to click right on a symbol and go to the options robot tool if it was something you'd be interested in. But anyways, everyone have a great, safe trading day, and we will see you tomorrow. Stay safe out there. Bye-bye.